had phone issues. Let me get right into it. Last week, I told you guys that the markets was going to potentially drop some more. I also warned you guys about, and I had mentioned about the stock market. I mentioned about the Forex market. I mentioned about the crypto market. I told everybody in advance exactly what I saw, especially when it came to Bitcoin. I told you guys that I saw it hitting down to the 40s level. And as of today, it is in the 40s level. Okay. So moving forward, I still see that there's potential standing grounds for it to balance itself out, but at the same time, it could go lower. I also have my eye on gold this week because gold has fell down more, but I still see that, and I wrote down, I still see that it can potentially go down to the 1756 level. And if it breaks past that level, then I think that it can hit into the 1724 level. Okay. So a lot of this stuff I had told you guys about last week. For those who tuned in and to heed to my warning, I told you guys, I told you this in advance so that you can trade accordingly and also protect your account, which is what we're going to be talking about today. I hope you take notes on today's video because I'm going to talk to you about how to protect your account. But the account that you think I'm going to be spending a lot of time on, it's not the account that I'm going to be talking about. But before we get into that, please hit the subscribe button if you like my videos, and also shoot me an email to superezforex@gmail.com if there's any topic you want me to cover that I haven't covered in my, I think 3 or 4 plus years, whatever number of years I've been doing videos. If I haven't covered something that you need information about, just let me know. Okay. Last but not least, also in the signals group, giving an update on that. Last week we were 7-3. Still holding 2 of the trades through this week, and the scalping group did 3,427 pips in the scalping group. Okay. And last week was very tumultuous. It had a lot of noise and news and stuff like that. All right, let's get into it. The markets are acting very crazy. And for those who are in my simplicity group who purchased the trading system, which by the way is still on sale for the holiday special, grab it while you can. I told you guys months in advance. I told you guys, and we even discussed it in class, exactly what was leading up to why there was going to be instability in the markets. We talked about this months in advance. So you guys were able to buy or sell at the top of the market well in advance because we talked about it in our group. Okay. Now, the key is that some people, this is where I need you to take notes because this is going to get deep and personal. All right. One of the biggest problems with managing money during turbulent times, when the markets are calm and everything is running smooth, it's beautiful, everything works good. The problem is that most people don't know how to manage accounts when things like this come up where the markets are turbulent, they're jumping up and down and so forth. So again, I know you think I'm going to be talking about the basic thing that you can hear on any YouTube video about money management. And I will hit on that just a little bit, but hang on tight because I got something deeper to take you to. And this was a question that was asked in class, and I'm going to bring it up to you guys, and we're going to spend quality time on it. Okay. There are 2 types of accounts, and I want you to begin to take notes. There are 2 types of accounts that you need to manage at all times. Let me tilt this down just a little bit. Hold on one second. Give me a second. There we go. There are 2 types of accounts that need to be managed at all times when trading. And a matter of fact, in your personal relationships as well. Okay. One is your financial account. So please write that down. And we're going to start with that account first, because this is the one most people hear plenty of YouTube videos about. The second one is the one that we hear nothing about. The first one is when you're trading, most average professional traders trade with only a 1 to 2% risk at any given time. Okay. Now I used to teach the theory of the of how to trade using what I call the 10 chances to win strategy. Okay. Now here's what the 10 chances to win strategy is, and it is above that 1 to 2% risk ratio. But nevertheless, just follow the calculation. You'll see, even if you went well beyond that, you still could do fine. So what is the 10 chances to win strategy? Well, the 10 chances to win strategy is, what if you had traded with $100? Okay, now watch this concept, and then we're going to jump right into the more important account that needs management as immediately. Okay, watch this. So let's get through the financial one first. If you had a $100 account, and you risked even all the way up to 10% of that account at any given time, 10% of that account on a trade, that still means even if you lost that trade, you still have how many chances to win? 9 more, because you still have 90% of your account. So even if you went all the way up to 10% per trade, which is well beyond normal standards, even if you lost that, would you not still have 90% left? Let's give it a different way. If you had a $100 account and you risked $10 on every trade, if you lost the first trade, you still have $90 left. If you lost the second trade, you still have $80 left. Then you win the next 3 trades, and now you're back at $110 in your account. So you see, even using that calculation of 10 chances to win, can you clearly see that there is absolutely no reason why people in the Forex arena should be constantly talking about every week, oh, I blew my account? That doesn't make sense at all. It just means you're a poor money manager, because the markets will cause any and everybody, from the largest institutions to the smallest, which, by the way, tons of people lost money last week. Okay, tons of people did, and all across the globe, because of this Omicron virus, and the market is just splish splashing and dropping all over the place because people don't know what the impact is going to be. Plus, they're lying. And well, let me be careful because this is recorded. There's some, in my opinion, understatements concerning inflation numbers, the impact of what it's going to be, and what it's going to look like for your future. Then they also clearly had did this no. They told the public that, oh, it looks like it's going to be transitory. Transitory means temporary. They use these bougie fancy words, but the truth of the matter is, they told everybody, the feds were talking about, oh, we think that this inflationary period is going to be transitory. Well, the word transitory simply means temporary. Then they came right back last week where Uncle Jerome, that's what we call him, Uncle Jerome Powell, our Fed chairman, came out and said, oh, it looks like it's not going to be transitory. Well, anybody with a legitimate brain in their head could easily have seen that was, of course, it's not. The fundamental reasons why prices are going up, which is going to get, and I'm telling you guys ahead of time, get stuff, whatever you're trying to get, do it now, because I believe, and my resources believe the same thing, it's going to get a lot worse. You heard it today. I'm telling you, what's today's date? It is December 5th. December 5th, you hear me tell you this. I told you guys last week in the video, I said Bitcoin going to be dropping down. I saw a lot of people coming out with videos. Oh, it looks like it's a triangle pattern. Oh, it looks like it's going to be shooting up to the moon and this and that. I told you guys. I said, no, I think it's going to be heading to the 40s. My video, I did not take it down. You can go check it out from last week. I told you guys about different variations of different things to look for. And lo and behold, a week later, here we are. Okay, so I'm telling you, when you're trading, you must trade with a legitimate skill set of understanding to stop being so greedy to try to flip an account so fast, because one false move and you can blow the whole thing out. You must become good at managing your account. Okay, so that's kind of common knowledge, but let's get to the one that actually really matters. Why do people do it in the first place? Why do they over leverage in the first place? Why are you hysterical over your account? Why are you upset with trading? Why are you staying up all night long when you should be spending time with your family? And instead you're on the charts trying to figure out a strategy, trying to do this, trying to do that. Why are you so frustrated with your trading career? Why are you so emotional and you can't, as soon as you place a trade, you can't stop looking at it? Come on now, this is real talk. I told you, the first one, there's tons of videos about money management. The second one, and here's the title of it, emotional management. Because it's one thing to manage your account financially, but what we don't ever talk about is how to manage ourselves emotionally. And let me give you the basic premise as to why this discussion is so important. It's very important, because if you don't ever get this under control, you will never, and I'm telling you the truth, you will never be a professional trader. I don't care how good of a long you could have been winning for the last 2 weeks, but all it takes is one loss, and then your emotions get thrown off, and all of a sudden you kick back to your bad habits as opposed to sticking with the routine. Come on now. Because all professional traders, good or bad, they have a routine. But when you are trading on your own without accountability, see, institutions, they can shut your account down and say, okay, hey, take a break. All right. And you have rules in place just like any job does. That's why people act better at their job than they do at home, because there's rules in place that can tax their income. Okay. In other words, you can get fired. There's a consequence. But when you're trading by yourself, there's no consequence other than you losing money. And there's no supervisor to tell you when to stop misbehaving. So therefore, when you could be on a good winning streak of 8 wins, 10 wins, and then you get cocky, and all of a sudden you get a week like what's just been going on, and then you over leverage being cocky, and you lose trade, and now you're feeling some kind of way, and your emotions kick in, and now you're not trading off of your rules, you're trading off of how you feel. Come on now. Now, this is some truth. That's why I said, if you like these kind of videos, please hit the like and subscribe button, and tell others about it who you know are trading and struggling. Again, I'm not trying to bring people on board. It's super easy. If they want to come, that's fine. If they don't, cool, that's fine. Again, but I will say, if you're an affiliate, make sure to tell them that the holiday sale is going to be over at the end of the month. So get that discount while it's there. But again, even if they don't want to join, that's fine. At least as retail traders, we can have a discussion point on facts, because I don't care how much you want to debate me on what your trading style is versus my trading style. Oh, I trade fundamentals, I trade technical analysis. Me personally, I think I'm a behavioral trader, okay, which is a third category nobody talks about, and thus we're having this conversation. Because if you cannot control your behavior, you will never succeed. You may have some winning streaks, but they will be blown away, because the moment you hit a rough week and you don't know how to emotionally recoup your account. Now watch what I'm talking about. I am talking about not your financial account. Everybody and mama always telling you about how to recoup your financial account. I am talking about your depleted emotional account. And this is the part that traders have to deal with, but nobody says a word. Why? Because it's just you and that computer. It's kind of like people who's addicted to porn. It's just them in that little secret room and their little secret compartment, and they hide with their little secret computer, sneaking and doing their thing. That is the same way Forex traders are in many rights, because the truth of the matter is you're trading, but your family really don't know exactly what you're doing. They don't know how painful the journey is that you're going through, trying to figure out how to make ends meet and how to pull some and glean money out of the market. They don't know about what it takes to be marking up charts and studying charts and trying to figure this thing out, and what's this and what's that and what's the best pair to trade, what's the best time for them to trade. And then you got 20 people, which I'm suggesting to you, stop subscribing to every channel that pops up a new bit of advice. Because majority of the people, they get, watch this, emotional, and they start using real money. They don't even demo test it. They use real money on a strategy that they don't know for sure, just because a video said it works, but they ain't tested it on demo. Why? Because you're emotional. And every time you go through one of these phases where you get a new indicator and you don't demo test it, you don't test it out, you don't read the manual, you just hop right in, throw it on your charts, thinking you know what you're doing, you blow up an account, then you do the rinse and repeat, because now you jumped into another indicator, you're doing the same thing over whatever your problem is, or you see a new strategy on the internet and then you try it on a live account and you keep blowing accounts, and what it's doing is gnawing away at your confidence in yourself. Come on, this is truth. See, the Bible says the truth will set you free. If I have told my students many times that if I was writing that scripture, I would have added a little extra sentence onto that. The truth will set you free if you accept it. See, the problem with some of you guys, can't nobody tell you nothing. The truth is there, but you don't want to accept it. And so therefore, no matter how much good information you get, and sometimes even from your family that says, take a break, because you're ruining not just your own self, you're ruining us too, because we live with you. You don't want to hear nobody tell you nothing. So therefore, because of your hard-headed stubbornness, your emotional bank account is being erupted and it's blowing up. And you're worried about trying to deal with your trading account, not paying any attention to your empty emotional account. And now you're angry, you're resentful, you're quick-tempered, you fuss a lot, you're very agitated, and you're unfocused and addicted to trading because you don't know when to stop. We have some people listening in right now. If you know, now I ain't saying you, but if you know some traders who fit this bill, please type a 100 in the box. I just want to make sure y'all on the same page with me, with some traders that you know. I ain't saying you, but some traders that you know kind of, fit within this category, because their emotional trading account is empty. They're bankrupt. I don't care how much money you have in your trading account. I'm talking about your emotional account is empty. And you never paid attention to it. Now, how did we get there in the first place? Well, let's go back to scripture for a minute. And again, whether you believe in the Bible or not, I'm not trying to convince you to believe in the Bible or to join my crew. I'm not doing that. I'm just teaching you principles based off of what retail traders have to deal with, because this is the truth, and the truth will set us free. Nothing more, nothing less. So until you acknowledge that this is really happening in your life, you can never be set free from it. So let's acknowledge what the truth is. The truth of the matter is the Bible was right the whole time. It said, where your treasure is, there will your heart be also. Now, when it says your heart, it doesn't mean the one beating in your chest. What it is referring to is your emotional state. Where your treasure is, or where you put your money at as an investment, you will feel some kind of way about it. You don't believe me? Why do most crimes happen? Over what? Money. If you could be having a good day, but if somebody tried to steal your money, you having a bad day. You could have a best friend, but if you found out that they were trying to steal some of your money, y'all ain't best friends no more. See, your emotions are attached to your money, and your money is attached to your emotions. And it's hard for you to disconnect the two. This is the reason why trading is such a hard business. It's a very easy business, but it's also a hard business, because once you put that trade in, automatically your heart, or quote unquote, your emotions kicks in. And once your emotions kick in, it interferes with the strategic process you had in place. What do I mean by that? Okay, here's what I mean. Many of you already had a strategy. See, that's the problem. And that's why I'm pushing hard on this. Many of you have 500 strategies that you could use at any given time, because you've been studying strategy. Okay? You subscribe to people who teach strategy. Nothing wrong with that. Problem is, the moment you implement that strategy, not on a demo account, but on a live account, you just introduced a third trading disaster, which is called your emotions. Because now you're not focused on just the strategy and making sure it works, tweaking it and this and that. You're more focused on the amount of money. See, you can't separate the two. This is why, in my personal opinion, I'm just telling y'all the truth. In my personal opinion, I think one of the biggest mistakes that most retail traders are making, they don't spend enough time in a demo account because they're too busy trying to make what? Money. See, your emotions kick in because you're driven to get these results of money, not the knowledge. Not to finalize a strategy that every week you can just come to the charts, do it, and it's working fine. And whether you lose or win a trade, it doesn't matter, because you know how professionals do it. They don't rank their professional trading career based off of 1 or 2 trades or even a bad week. They do a summation of a month and look back and say, over the month, what have I accomplished? This is why when you look at financial reports, or even when you're looking at news events, which is coming up this week like they did last week, you will see in some of these news events, they will have what's called MOM, after the news event, like core CPI, MOM, or retail numbers, MOM, or retail numbers, YOY. Well, what does the MOM and the YOY stand for? In the professional world of trading, you never see them talk about day-to-day results. Never. That's only retail traders. Only retail traders do that. Because what the professionals in the stock market, Forex, all over the globe, they all do it by MOM or YOY. Write this down so you'll have this knowledge. What does MOM and YOY stands for? MOM stands for month over month. And YOY stands for year over year. See, they're testing and tracking what's happening on a monthly basis and then on a year-to-year basis. But the average retail trader is doing it by day-to-day basis, which is why you're distracted. Because your sights are set on a day-to-day quick results, as opposed to the professionals are doing it month over month and year over year. This is again why I said I think it's an actual joke, and I'm not talking about the strategy, but the mentality. Please write that down. Not the strategy, but the mentality concerning beat the market maker's method. You can never beat the market maker's method. You can never beat the banks because, first of all, it's not about the strategy. It's about your mentality that's screwing the whole thing up. You messing it up. You're getting in your own way because you keep involving how you feel about the trade. You keep watching it every few minutes. You keep determining your success trade by trade versus month by month and year over year. If I'm touching on your heart, type of amen. I just want to make sure I'm teaching correctly. I want to make sure while I'm adjusting this camera a bit, I want to make sure that you guys are really getting what I'm saying. I just want to make sure. We got some people tuning in and thousands are watching us later. I just want to make sure you guys are understanding what I'm talking about. I don't want to leave nobody in the back, in the dust, because this is what separates the retail trader from the average big institutions. It is the thinking process, not the results. Some of you guys don't even realize the same trade that you lost money on, so did they. Trust me, I'm following some of them. That's how I know. Some of the biggest traders in the world, I'm actually following them and working. So I know, I see it, but I see the vast difference between the average retail trader's thinking process and the professional world of traders. And it's not that you didn't lose a trade the same time they did. They lost the trade the same time you did. Why? Because when the news event comes out that they didn't anticipate, like the Omicron variant, they didn't anticipate that. Now, all of a sudden, the market drops. Sometimes you lose trades or boop, 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 boop. The market news is just all over the place. They lose too. But here's what they lose. They lose 2%, 1% of their account. You lost 50% of your account. Why? Because you was trying to flip that account so you can go and, you wanted to go and show everybody all them greens. My take profit got hit, all them greens. You never see a bank or institution pulling that stupidity. Never. It's only the retail trader. Why? They're trying to show off. Flaw number one. You're trying to inflate your ego and it's getting blown up and you're getting embarrassed. Not because of the market, but because of you. You could have easily spent 1 to 2% on that account, or even up to 10%, which is high. But even if you risk 10% on that account, you still would have had 90% left to trade another day. But every week you keep filling that account right back up. Why? Because you're getting involved emotionally. This is business. Yes, every once in a while I may show some of the stuff I have, but the majority of the time I don't, because I don't want to send the image that, oh, it's all about flossing. Because realistically, I don't. I have things, but I don't floss a lot. I used to do that, but I don't do that no more. Because I know the guy can blow on it and it can be gone tomorrow. So I have to work on my emotional state when I'm approaching the markets. I have to make my account survive. Here's the other benefit of trading with less percentage versus trying to double your account in one trade. Because watch this, and no, I've been teaching this principle for I don't know how long. Write this down. Here's where your results are cascading you into an emotional pit of depression. And that's where some of you guys are. You ain't told nobody this. You ain't said a word to nobody, but you're actually dealing with depression now. You're dealing with anger. You're dealing with all these negative emotions that never existed prior to you choosing to enter into the trading career. And now you sometimes don't even recognize yourself. You're like a monster to yourself. And then sometimes some of you guys are good at faking it. So you hide your depression because of all this different stuff that you didn't know emotionally was going to come with it, which is easily manageable, but nobody teaches about it. So you didn't know. So I'm not faulting you, but as of today, I will. But you're hiding this and you're trying to smile, but you're broke on the inside. Not just your a trading account, but your emotional state. And you're having a hard time holding it together. You spent hours upon them charts with nothing to show for it. And now you're broken. You're broke. And I ain't talking about just your pockets. I'm talking about your emotional state. How do I know? Because I've been there a number of times. And when you're dealing with people and living with people who don't trade, they don't know what you're dealing with. And there's no video on YouTube that talks about this subject. Come on now. This is the TRUTH. Now, how do we fix this? I'm glad you asked. One of the things I realized when I started implementing what the banks are actually doing, not just their strategy on charts, which, by the way, just so you know, one of the best ways, and I've been telling y'all this for the longest, one of the best ways, you don't got to fight against the markets. Go with the flow. Do what they're doing. Well, one of the first things they do is before they look at the charts, they look at not the short time frames. They look at the 4-hour, daily, or weekly time frames. They look from the higher perspective. I've been teaching this for the longest to you guys. Go to the higher time frames before you start talking about, I'm going to scalp, and I'm going to do this and that. Okay, well, do your thing. Keep rinsing and repeating your foolishness. Or if you're really going to be like the banks, like I told my students, I said, if I was sitting here teaching the class to institutional traders about the necessity of looking at higher time frames, would they not throw me out of the room? And all of my students said yes. Well, why would they throw me out the room? Because it's common knowledge to banks and institutions to trade off of higher time frames. It's just common knowledge. It's only to the retail community where you get beat upside your head, criticized, called a scam and everything else for telling the truth about how the institutions are actually doing it. Because they're so driven in their minds that you only need to be doing this. You only need to be doing, okay, but how many have successful results or a long-term career to show for it? Or better yet, an emotional state that is not shattered. And yet you're still sticking to your ideology. This is why I avoid dealing with stubborn people, because they automatically are going to find destruction right around the corner and still keep fighting for what they believe is the truth, as opposed to adapting their thinking to the reality that this is exactly what the institutions are looking for. Then you go down to whatever time frame you want, 1 minute, 5 minute, 15 minute, whatever floats your boat, because now you got the perspective of what's really going on with the bigger picture, and then you drill down to the smaller. And then after you do that, and I'm spitting fire. I hope you're listening. And then after you do that, before you place the trade, you take in account how much do I have in my account and how much do I need to risk that. Watch this. Oh my, here we go. Watch this. Not what I can financially afford, but what can I, watch this, write this down. I pray to God you write this down. Because to this day, I still have to do this. What can I emotionally afford? See, it's one thing to say that, okay, if I have a $1,000 account, I can risk $100. Yes, you could. Yes, you could. Because if you lost $100, you still have $990. I mean, you still have $900 left, right? But just plenty enough to trade with. Not a problem. But the problem is that when you lose 100, are you going to be cussing and fussing and wanting to throw your computer out the window? Is it going to cascade your emotional state deeper into depression? Are you going to be a lot more snappy and angrier and hard to deal with around your family members? How is it going to impact you emotionally? Are you understanding what I'm saying? Let me give you an example. I had to check somebody recently. So when you're trading, you're going to win trades or you're going to lose some trades. But this person inform me that, oh, I'm trading with $1 million account. Okay, and okay. So why are you tripping? See, you treat the $1 million account the same way you do the $100 account. Risk management. The problem is that when the markets start doing fluctuations, as opposed to just hold the trade, because typically a lot of times, and I'm just giving y'all a little heads up, a lot of times they will play with certain pairs all week long. They just tamper. And then towards the end of the week, I call it the Friday flush. Because at the end of the week, they just flush everything out in the direction that you knew the whole time. But what they do is they just keep it choppy and sideways. Okay, that's what y'all call them, sideways patterns. Okay, they keep it sideways for a little while, and then all of a sudden, boom, it just goes right in the direction. Well, when it's doing this choppy sideways stuff, this is where a lot of traders get frustrated and they dip out of a trade, or they just get pissed and just cut their trades early because they have no what? Patience, and the market knows that, and it taxes people. And so this person had zero patience. Oh, this and that. And had they just sat their butt still on Friday, this past Friday, all the things that they whining about, they could have cashed out big on a large account. But what was the problem? It wasn't about the fact that they couldn't afford it with $1 million account. It wasn't that. Listen to what I said. It wasn't that they financially, and that's why I'm going to provide clarification. It wasn't that they financially couldn't afford to do it. What was the problem? They had $1 million financial account and a 10-cent emotional account. Type of amen if you heard what I just said. Because I want you guys to really see this. See, it's not about how much money. It's about you and what you can handle. Are you hearing what I'm saying? So I don't care how much money you have. Well, that's cool that you can start with a $10,000 account. That's cool that you can start with a $50,000 account. That's cool. But I suggest you don't. Because it's not about what you can handle financially. The question is, what can you handle emotionally? Because if you have a $50,000 trading account, but a 10-cent emotional account, your emotional account is going to interfere with that $50,000 account and destroy it every single time. You're going to be cutting trades early when you should have sat your butt still. You could have simply, like I did last week on one of the trades, when I sent out that signal, I told everybody, and this is GBP AUD. I told everybody, I say, hey, let's just adjust our stop loss and adjust our take profit a little bit higher, because I see that they trying to do wop to wop. You understand what I'm saying? They trying to play games. So let's just adjust it down a little bit. And when we woke up, bing, we were up 78 pips. That thing shot up like a rocket. See, I knew what they was trying to do. But listen to what I said. You missed it. When I did what? Woke up. Why is that important? Because I took my behind to sleep. Some of you guys, you're not able to sleep in peace because these trades are interfering with your sleep patterns. You're exhausted, you're tired, and everything else. Why? Because you cannot afford emotionally to handle this. So this is why I'm suggesting that some of you guys need to not worry about trading your strategy on a live account, but gaining control of your emotional state so that when you place the trade, you're placing with confidence. And even if it doesn't work out, you can just keep it moving like it's not a big deal. But some of you guys, you have been, I'm going to take this one step further. I hope you guys don't mind. If I can take this one step further real quick and then I'll close. I promise I won't be much longer, but just type in number one if I can take it one step further, because I'm going to take this a little bit deeper. We have to go a little bit deeper. If that's okay with you guys who's listening right now, and I know thousands will watch this later, that's cool. But I want to take it one step deeper because you need to find out the origin of where this came from. Okay, Thomas said okay. Anybody else? Okay, Matthew. Okay, all right. All right, cool. All right, cool. All right, cool. People saying it's okay. Let me take this one step further. Where is this coming from? Where's all this coming from that we're talking about today? I will tell you where it's coming from. I personally think, which is why I think I call myself a behavioral trader. Okay. I do behavioral analysis, even on the markets. I follow behaviors, not necessarily technical, not necessarily fundamental, but how do people react and why? And I am a certified life coach, okay? And I went to school for psychology and all these different things. Here's what I do know about traders. A lot of traders should not be trading, not because they can't learn how to trade, but when they take a loss, it triggers something deeper. And also, what's his name? Joseph Martinez. I think his name Joseph Martinez. But he wrote a book on trading, and I got it over there. I can't remember the name of it. But anyway, he also alluded to this concept. The problem is when you take a loss, it's not just a loss on your financial account. When you take a loss, it's a loss against you personally. Here's what I mean. If you grew up in an abusive home, came out of an abusive relationship, if you're dealing with self-esteem issues, if you're dealing with depression and all these different things, every win makes you feel like you're a king or queen, but every loss makes you feel like you're a loser. And it's no longer about a simple win or loss trade, which is what it should be. It's just a game like Monopoly. It's just, hey, sometimes you win some, sometimes you lose. You go to a casino and you understand, hey, you go right into Las Vegas casino knowing, hey, I'm just here for a good time. You don't attach any emotional fortitude to it. You don't attach who you are and the value of who you are and your perception of yourself to the casino in Las Vegas. You're just there to have a good time. You pretty much know you're gonna lose your money in Las Vegas, but it's just the fun of hearing the machine. But the problem is you don't take that same concept into your trading career, because now it's a reflection of you, because you studied a strategy. You are the one implementing this and thinking that the odds are going to automatically be on my favor because it's me. And so therefore, every win that you get, you overexcited about it. But every loss you take, it cascades you into a deep emotional pit that you find it hard to get out of. And the more you lose a trade, the more strategy don't work, that you didn't fully test before you got involved with it, the more it's a condemnation or reflection, not of the trade, not of the strategy that can simply be adjusted, but it's a reflection of who you are. Because what you're trying to do is not fix just your financial situation. You're trying to fix, and you not know this, and nobody told you this, but for many of you guys, you're trying to fix your own self-image in your own eyes because you don't really see yourself as good as you should. Some of you guys, and I'm talking to religious people, oh yeah, I'm a child of God. That's great to say it, but you really don't believe it, because your self-esteem has hit damage control. You're dealing with damage control over your self-esteem as it is. And then you turn around and enter into the Forex market or crypto market, whatever. And when seasons like this happen where the markets are shaky and a lot of people are losing and winning trades back and forth equally, to you, it's not equal, it's personal. Because you were already dealing with a fragile self-esteem. You were already dealing with a fragile ego. And this trading career is just causing you more harm and damage. You're not able to focus and see it just as a transaction. I hope this is making sense. Why can't you treat it the same way that you did when you went to Vegas? You went to Vegas, walked through the casino door with the information in head. I'm not even tripping. I have already budgeted how much, and some people even have conversations with their friends. Well, I'm only going to take 500 in there. Well, I'm only going to see, because they already have budgeted how much they're willing to get rid of, and as long as it was a good time. It was nothing personal. It was just fun. But in the Forex market, it's different. Why? It doesn't have to be. Matter of fact, the Forex market is better than Las Vegas because at least you can implement strategies that you can test and try over time to see which ones work. And then over time, here's my winning percentage, whether it's 60, 70, 80%, it doesn't matter. So the odds are in your favor more over here. But the problem is not really, because over here, you're putting yourself into the picture. Let me give it to you guys another way so you can really get this concept. Sometimes I watch some of these movies and there's a murderer and he comes and he almost the hero comes in and trying to do his thing, and then the murderer says, well, man, hey, it wasn't, and they used to be friends. And then they find out, hey man, you betrayed me, you this and that. And what did the bad guy always say? Hey man, it wasn't personal. It was just what? Somebody type that word. You already know what it should be. You didn't see movies just like me. They say it wasn't personal. Yeah, I killed your wife. Yeah, I killed your child. Yeah, I killed your mama, your daddy, your cat. It wasn't personal. It was what? There you go. Donnie, you got it. He said it first. Trina, you got it. It was just business. See, because to them, it's just a transaction. But to the person who they just murdered, their dog, cat, wife, or dog, or son, see, it was personal. So do you see the thought process? Two people involved in the same situation, but one is saying, oh, it was just business. Now, of course, the one you done killed my dog, it ain't business no more, man. I'm finna kill you because this is personal. And I get that. But when it comes to the Forex market, the market is nothing more than just a financial machine. It's just there to, and by the way, do you guys know, watch this. Some of you guys don't even know this. It's such a machine to the point that there's algorithms that's actually trading for a lot of large institutions. They don't even trade themselves. They got away from that. So they build these algorithms, and sometimes they win, sometimes they don't. And it's so automated for them until they completely remove the human factor. And if the things start losing too much, they can shut the machine down after 2% risk on certain accounts. And then they just, okay, you're done for today. But even if you're a stock analyst or a market analyst and you trade in other people's accounts, that's fine. They just shut you down after about 2 or 3% loss. And it's over. You're done for today. Come back tomorrow. Real simple. Real simple. See, it's just rules. Problem is you don't have emotional rules over you. Everybody wants to be an entrepreneur. I want to work for myself. Be careful what you ask for. Because oftentimes the rules is what's keeping you balanced. The rules is the thing that's keeping you your sanity. And now that you have complete autonomy to do whatever you wish to do with that trading account, it's destroying you and your family. Because it's too much freedom for you to handle. You can't handle it. And why? Because it's tapping into all of your history. Back in the day when they used to make fun of you, when they used to call you stupid, when they used to say you'll never be nothing. You're fighting every single bit of your history every time you place a trade. And that's a no-no. The market, when it opens today, it says, I'm open for what? Business, not for your emotional pleasure. I'm here to take your money, and you're here to take mine. Let's play the game. That's what the market says, but that's not what your heart says. And so I suggest, just like you're trying to spend a lot of time figuring out your strategy, I strongly suggest you figure out an emotional strategy. I don't care. I get this question all the time. Well, Uncle P, well, I'm ready to get started. How much you think I should start with? My answer is always going to be nothing. Start with nothing. Start in demo. Not because of the strategy, but you have to find out what you handle. Have you ever, guys, and let me leave this because I'm done. I got 3 minutes. Let me close this out. But I'm going to leave you with this thought. Watch this. Answer this. Riddle me this. Riddle me this. Riddle me this. Riddle me this. Have you ever wondered why you can place a trade in your demo account and you completely forgot about it? And you tripping out on your little $100 or $50 or $25 account, the real one. And then you go back and you look at a trade that you placed on your demo account, the one rare time you did, and you go back a week later, and that demo account is huge. That one trade blew the heck up. It worked. But you forgot about it. And then you just haphazardly was scrolling through your haphazardly. I learned that in school. That means accidentally. You weren't purposely trying to log back into your demo account. You was just doing something. You just happened to came across and say, "Oh, let me," and you went back to your demo for a minute and you go, "Whoa!" And you were surprised to see how big that account grew. Why did it grow? Because you left it alone. You had no emotional attachments to it. Thomas said, that's me. See, you ain't the only one. That happened to everybody. What was the difference? You used the same exact strategy on that demo trade, but then you blowing up your account on the real one. What was the difference? It wasn't the strategy. It was the person, loved one. It was you. You keep interfering with your trades. Do you see what I'm saying? You placed the trade, placed the stop loss, placed your take profit, and you left it alone to let it do what it do. But then, on the live account, you're wreaking havoc on that live account, and the live account is wreaking havoc on you. You supposed to be, Lord, I'm trying to quit this video. I'm trying to quit the video, but you keep telling me. Some of y'all, let me be very clear. I don't know who this is for, but somebody who's tuning in now, or I know one of the thousands who'll be watching it later, whatever. Let me say this. You about to lose your job because you think that the boss don't realize that your production numbers have went down. Your job performance sucks. Not because you're a bad employee, but because you're a distracted employee. Because now that you place that trade every few freaking minutes, you're staring at your phone, staring in panic and ultimate fear over that trade. When it's the same exact strategy you used on the demo and completely forgot about it and actually made money. And you're threatening the security of your family over $100 account, a $500 account, a $1,000 account, but you're about to lose all the income that sustains the family over a trading account that you can't stop staring at. Because your emotional bank account, when you place that trade, you may have had $100 in your trading account, but you only had 5 cents in your emotional account. And the moment you placed the trade, that 5 cents was spent. And now you're running on empty. And that trading account is driving you nuts to the point that if they fire you, you ain't got a backup plan. Because you ain't a good trader yet because you haven't learned to navigate around your emotions. And now it's threatening the safety and stability of your family. I told you this was going to be a tough video. I told you. Because ain't nobody going to do videos like this on YouTube. Where else have you ever heard a video like this telling the truth about the emotional state of traders? And meanwhile, you get frustrated because you look at the institutional traders, and they are on yachts and they are going to lunch and they're at the golf clubs and they're doing all these different things. And meanwhile, they're letting their quote unquote money work for them. And yet your money is putting you to work like a prostitute. Your money is pimping you. Every time you open a trade in the market, you're being pimped. You're being hustled. As opposed to you hustling your money and making it work for you. You working like a slave for that extra couple of dollars to win that trade at the expense of your family, at the expense of your emotions. It's not even worth it. And when you were trading demo, you could care less and you were actually winning. So as you can see, sometimes you don't need an extra strategy. You need to actually put some energy into strategizing your emotions. Let me leave you with this tip. I have said, and I told you guys, let me go back to what I said. There are 3 areas that will be under attack the moment you place a trade. I call it the 3 over leverages. Write this down. Don't say I didn't help you with nothing. This is the 3 over leverages. The first one is the moment you place the trade, many people are over leveraging their account. In other words, they're trading more than what they can afford to lose in the first place. Okay. Financial over leverage. Write that down as number one. Number two, emotional over leverage. Now you're emotional, highly emotional. You're volatile. Even the people around you are scared to deal with you because they notice you on a trigger hair emotion. You go off in a snap of because you're so wound up tight over that trade. This trading stuff has turned you into a monster. You're hard to live with and deal with. So if I'm talking to you, you better stop opening your mouth to your significant other and go in and apologize before you lose everything over a freaking trade. You keep attacking and blaming them when in essence, you know for sure they're not the problem. You know it, but that ain't what you're telling them. You ain't supportive. You ain't this and that. No. Who would want to support a fool who's going off and acting crazy over a freaking trade? A fool who's about to lose their job over a freaking trade because you can't manage yourself. And now you're trying to find somebody else to blame because you don't want to accept responsibility. Because ain't nobody talked to you and told you the truth about what's going on for you. So the first one is a financial overleverage, which automatically triggers number two, which is emotional overleverage, which triggers number three. What's number three? Time overleverage. Some of you guys are neglecting your families, your friends, your loved ones, significant other, whatever you want to say. The trading stuff has completely taken over your life. You refuse to get toolage. You refuse to invest into good don't. Let me be very clear. You don't want nobody touching your money. Oh, I'll manage your account. No, I'll leave that alone. That's why you'll never hear me say that. If anybody says Uncle P manages people's account, you know they are doggone lie in the pit from the pit of hell. I never touch a person's account. I will teach you skills, but I'm not going to touch your account because I expect you to learn so you can learn how to do it on your own. Even in our signal service, we send out trading suggestions. You can still take it or leave it. You don't have to. Do you understand what I'm saying? Don't do that. Well, I'm going to let this person manage it. No, you are going to be a bigger fool than ever. Unless they are reputable, leave them alone. But time over leverage means this. You spend day and night on your charts. Now, if you're trying to work through a new strategy, that's understandable. You do have to give time to it and invest in some time into it. But what I'm talking about is you've already placed the trade. Now you're feeling some kind of way about it. And now, watch this, you can't stop staring at your phone. Every few seconds, every waking hour and minute, you're staring at the trade. You can't eat, you can't sleep. You're having panic attacks. You're in depression because you're addicted to the trade. And now you can't cut it off. And now you're over leveraged on your time. Time that should have been allocated to spending time with your family, kids, or whatever else. You are giving everything to these charts. And that's dangerous. So do you see how the three horsemen, the deadly horsemen of trading, financial over leverage, emotional over leverage, and time over leverage. One simple way or two simple suggestions to fix this chaos in your life. Number one, go back to trading and demo. Go back to your original when it was just fun. It was just monopoly money. No, man, I got to make this money. At what expense? What is it costing you? Even when you win a trade, the havoc it wreaked in your life, what's the trade even worth it? But if you was in demo, it was just fun. And some of you guys, you literally came out of demo counts way too fast. And I suggest go back to demo for a little while, and not just for the strategy's sake, but to also learn how to manage your time and your emotions so that it's just a routine thing. Hey, when the trade wins, and what's good about that, you can document it so that moving forward, watch this. Oh God, I gotta quit. But listen, let me bless y'all. The benefit you should have been doing in demo, hear me good. Because even when you buy our trading system, one of the things that's in there for free is a trading journal. Why is that so significant? Because even when you're having a good week or bad week, because it's in demo, you really don't care. But when you're documenting each trade, you'll begin to see, okay, this currency pair, the GBP or the GBP moves faster or slower. This pair moves slower, but it pays better, this and that. You begin to document your journey without the emotional baggage. And you can still be a happy-go-lucky person, spending quality time without threatening your job. Nothing gets threatened. And at the end of the MOM, it's not mom, what is it? Month over month. So if you stay in demo for about a month, you can track your results and go back and say, well, hello there. Okay? Like I have to do with the signals. Okay? I told you guys last week we were 19-6. Well, add 7 more to 19, that put us at 26, and add 3 losses, 26, and so we're 26-9. See, because I bunch it together, it's okay. 26 wins, 9 losses. Understood. Especially during a horrible trading environment like the last several weeks. This last 2 months been a terrible trading environment. So to walk away with 26-9 so far, not bad. Not bad at all. See, but look at how I have to look at it. By bunching the numbers together over the 3-week period of time, or 4-week period of time, your perspective says, oh, it ain't as bad as I was thinking. If you go trade by trade, now you're all emotional and you don't do the bigger picture. That's why institutions and companies, when they report their earnings, they report it every quarter. They do quarterly earnings reports, not week. Now, internally at the company, they may track day-to-day, your supervisors tracking day-to-day processes. That's why they're more stressed out than the ones over them. The ones over them begin to track month-over-month processes. The CEOs begin to track year-over-year. So you see, the higher the level of thinking, the larger the perspective of information they take in. So if you're low-level thinking, that's the reason why you're tracking low-level numbers. Did you hear what I said? I just spit some fire. Oh my God. I should be on stage and charging for this one. Think about it at your own job. At the corporate level, they're tracking larger numbers, month over month, year over year reports. But at your job, your boss is hounding you for what? Day-to-day results. See, the lower the level, the lower the thinking. You get it? So they're tracking day-to-day production numbers, which is important. I'm not saying it's wrong, but I'm just telling you this is the level of thinking. So the lower the level, the more micromanaged it is. And they don't really see the bigger picture to see it ain't as bad as you think. But the higher it goes, the bigger they begin to take in more information and get a global perspective, kind of like retail traders versus institutional traders. Retail traders are checking every 2 minutes, every 5 minutes. But the institutions say, okay, what have we done for the week? What have we done for the month? And it's not personal. And it's not personal. To the lower levels, everything is personal. Squabbling and fighting at the job. Lower level thinking. Higher level thinking, they don't squabble like that. They have meetings. And they have a strategy planning session. And then they go in and implement it. And they track it over a couple of months of time. Then they come back and have another meeting. And they figure out, okay, hey, how did this work over the last several weeks, over the last quarter? How well did our new strategy work? See, even when they come up with a strategy, they test it over a quarter period of time. They give it several weeks to make sure that it has time to be tweaked and adjust. The average retail trader never does that. They're too busy trying to make quick money. And that's why I said you're never going to be a professional. I'm just being honest. You're not going to make it the way you are because you're too busy in your own way, destroying your own life. So I'm going to stop this video. I said enough. Again, if you like this video, if you think that I provided something of substance that could really help you, I would appreciate just hit the like and subscribe button, okay? Just so, and better yet, shoot me an email so that if you want me to talk about topic on the real, keeping it 100, shoot me an email to superezforex@gmail.com. And I do not care whether you're part of Super Easy Forex or not. I really don't care. That's fine. Because at the end of the day, we're all retail traders. That's why I do these videos, to help the retail trader, the one who's struggling, trying to provide for their families, and nobody's and nobody wants to talk about the rough side of the mountain. That's why I'm doing it, to help you, to let you know, yeah, you're on this journey, but there's a difference. If you just, I ain't telling you to get off the journey, but I am telling you to refocus how you're climbing up the mountain. You maybe have to put your foot over here instead of putting it over there. You know, like a good coach would do. Pivot and move. I was watching Venus and Serena's movie last night, King Richard. It was actually a good movie with Will Smith. And the coaches were constantly telling them, no, you need to do this. And it had them repeat. Did y'all know that Venus was the one for 3 years, she didn't play even one match. For 3 years. They just had her practicing. 3 years when she was a teenager. And when she finally did go to her first match, she beat she went all the way from not playing in 3 years to almost beating the top champion at that time. The top champion had to pull a bullcrap move on Venus when she was a teenager in her first professional match, and almost won the championship in her first professional match. And then the person who was the champion at the time pulled a janky move and ended up winning. But then Venus went back to the locker room, and I'm kind of telling you, I ain't telling you the whole movie, I'm just telling you from what it takes to be a champion. So then she went back to the locker room and she was in there crying by herself. Her parents came in and encouraged her. And then they walked her out to walk her to the car and didn't know that she had fans standing outside. It wasn't that she won the championship after not playing anybody for 3 years. All they had her doing was practicing. Oh, and it gets better. Look, when you watch that, I can't give you I ain't gonna do a spoiler alert, but watch, even before she went to that match, she had got an offer by Nike for a certain amount. And then she lost that match, but because of how well she played the game, even without winning the championship. Look at how much money all them companies came and tried to offer her right afterwards. Watch that movie, and it'll tell a lot about you as a Forex trader. You don't have to win every match. You just have to practice. Her practice time paid off. Her daddy said, no, I'm not going to put her in these junior leagues. I'm going to let her practice, all by herself where nobody is paying attention. But when she finally showed up, the world knew who she was. How much practice time did you put in to deal with not only being able, and watch this, when they interviewed her, her daddy said, oh, well, you're going to be playing against the top player in the world. And she sat there so chill. And her daddy said, Venus, do you care who's going to be on the court? She said, and she was a teenager, no, I don't care. Are you going to win? She said, yeah. She said it with such confidence. Why? Because she knew she had honed her skill so well in practice, in a demo account, to whenever she hit the court, she knew she was going to be a winner. She had watch this. Did she actually win a match yet? No, she hadn't played for 3 years. But when she hit that court, she had confidence because she knew she put the work in on the demo account so that whenever she finally went to the live, she was going to find success. And she did. And so can you. Go back to demo for a little while. Practice. Don't be in a rush for the money. The money will be there. But just practice a little bit longer. Get your emotions under control. Get your confidence level back up. And get you some sleep. And get you some peace. And then when you finally get back to trading on a real account, man, game over. Game over. The market can't abuse you no more. Have a good one, y'all. Peace.